So that in number 28, the consolidated amount of sales is still 10,140,000. So number 28 is still letter C. Next, I have given you numbers 37 to 42. So let's now proceed to numbers 37 up to 42. At 39, I mean, to 42. It's inventory from dresser for 120,000 on September 2020 export and resold 8% of the inventory to unaffiliated companies prior to December 31, 20 export for 140,000. Dresser produced the inventory sold to Lorne for 75,000. Owned 70% of dressers voting stock. The companies had no other transactions during 2024. What amount of sales will be reported in the consolidated income statement? So this time, Lom is the buyer and dresser is the seller. And resold 8% of the inventory to unaffiliated companies. So 80%, meaning the inventory is still 20% to, for the amount of sales made to unaffiliated companies was 140,000. Dresser produced inventory sold to Lom. In other words, this time the seller is dresser and Lom is the buyer uh, for 75,000. Owned 70% of dressers voting common stock. So in other words, Lom here is the owner of 70% of dressers voting stock. So in number 29, number 39, we have 39 up to number 42. For 39, what amount? In number 39, what amount of sales? So number 39, now we have letter C. We are asked for the amount of sales that should be shown in the consolidated income statement. So the amount of sales initially was 140,000. And we have now the intercompany sales of 120,000. Now the question is, what amount of, in number 39, what amount of sales will be reported in the 2024 consolidated income statement, considering that the companies had no other transactions during 20x4, and the amount of sales to unaffiliated companies was 140,000. So that's the amount to be shown in the consolidated income statement. What amount of cost of goods sold will be reported in the 20x4 consolidated income statement? So we have now the amount paid by Lom Corporation is 120,000. That's the amount of the purchase. Then we deduct the unrealized profit equal to 45,000 because the given amount of actual cost is 75,000. Then 75,000 we multiply by 80% the portion sold. So meaning the cost of goods sold is 60,000 in number 40. Then number 41, what amount of consolidated net income will be assigned to the controlling interest for 20x4? The consolidated amount of sales of 140,000 in number 39. Then we deduct the cost of goods sold of 60,000. That's in number 40. So the consolidated net income is 80,000. So the consolidated net income, we are now trying to compute for number 41. Okay, so number 41, and we have now the amount of number 41, the consolidated net income. The consolidated net income 41 is asking for the amount of consolidated net income. Okay, so in number, let me see, I cannot go to number 41 for the consolidated net income. Number 41. What amount of consolidated net income will be assigned to the controlling interest? We have 41 and number 41, the consolidated sales of 140,000 minus the cost of goods sold. So we have now the consolidated net income without deducting expenses. 80,000. Actually, this is gross profit, but we are not given the amount of expenses. So for the income to dressers, non-controlling interest, sales of 120,000, reported cost of sales of 75,000. That's now for dresser, and we have the given amount of 75,000 for the cost. So we have reported income of 45,000. 80% is the portion realized. So we now get 36,000 of 80 or 80%. So do we have the realized net income? Then the portion to the non-controlling interest is 30% because the ownership of the parent here is 70%. So meaning the portion owned by the non-controlling interest is 30%. That's equal to 10,800 for the amount of the consolidated income that's assigned to the controlling interest. It's 69,200. 69,200. So number 41 is letter E. In number 42, what inventory balance will be reported by the consolidated entity? So the inventory recorded by Lorne is 24,000, and that's for the portion of the inventory unsold. And we have now the unrealized profit actually is total of 45,000. So we have the 20% to be considered at 9,000. So the ending inventory to be now 15,000. That's the amount of inventory. Okay, so we have now the next problem. After 3 to 47, actually we have SAP company sells all its output of at 20% above cost. Here is PAR. PAR purchases all its inventory from SAP. Incomes reported by the companies over the past 3 years are as follows. So in other words, SAP company is the seller and the PAR company is the buyer in inventory from SAP. Now for the SAP company's net income, and we have PAR Corporation's operating income in the years 20x5. SAP company sold inventory for 300,000 to 62,500 and 337,500 in the 3 years. PAR company reported in the inventory of 105,000, 157,500, and 180,000 for 20x3, x4, and x5 respectively. PAR acquired 70% of the ownership of SAP. In other words, PAR is the parent and the subsidiary is SAP on January 1, 20x3 at underlying book value. The fair value of the non-controlling interest at the date of acquisition was equal to 30% of the book value of SAP. So what will be the consolidated net income for 20x3? Now we have question number 43 for the consolidated net income for 20x3. Now remember, we have 3 years. So for 20x3, we now begin with P company's net income given at 225,000. That's the net income of P company for 20x3. Then we have the realized profit in beginning inventory of S company. Actually, no deferrals will be recorded by P company. The fact that sub company is the seller and P company is just a buyer. So meaning to say we have an upstream sale. So the net income of P company from separate operations of 225,000. That's the net income of P company from separate operations. Then S company's net income from own operations initially at 150,000 and realized profit in the beginning inventory with an upstream sales is 0 because no purchases were made by P company prior to 20x3. So we have now the unrealized profit in the ending inventory of P company in the upstream sales. So the ending inventory of P company is 105,000 as given. Then we multiply it by 20 over 120. So we are now given 20% above cost over 120. We now have the unrealized profit of 17,500, giving us the realized net income from separate operations. So the consolidated net income for 20x3 is 307,500. Question number 44. What will be the consolidated net income for 20x4? So the consolidated net income for 20x4, again, we begin from P company's net income from separate operations of 360,000, no realized and unrealized profit. Again, the fact that P company is just a buyer. So we have P company's realized net income for 20x4, and then we have S company's net income from own operations 135,000, and we are now adding the unrealized profit of 20x3 now becomes realized in 20x4 again since the sales is upstream is selling copy, so we now recognize the deferrals in the books of S. So we now have the realized profit and the beginning inventory of 17,500, and we deduct the unrealized profit in the ending inventory of P. The ending inventory of P in 20x4 is 157,500, and now we multiply it by 20 over 120, we get 26,250. Now we are adding 152,500 minus 26,250, giving us S company's realized net income from separate operations, which we are going to add to the net income of P company. So we have the total of 486,250, no allocated excess. So the consolidated net income of 486,250. Then the non-controlling interest in net income of the subsidiary of 1,610. We are having the difference. So we have now the controlling interest in net income of profit or profit attributable to equity holders of parent. So that gives us the amount of, actually it's difference between the consolidated net income of 486,250. So 486,250 minus 1,610, or a difference equal to 485,640 in 486,250. That's the consolidated net income. The amount assigned to the non-controlling interest is the difference after deducting the share of the non-controlling interest. So we have now the amount of a consolidated net income for 20x4 and number 44. The answer is 486,250. In number 44, the consolidated net income is 486,250. Actually, it's given as the consolidated net income. Now, interest for 20x4. When we have now 486,250. So the answer to number of the difference. So the consolidated net income of 450, when we have the non-controlling income, okay, we have the non-controlling interest in net income that we have to determine. Okay, the non-controlling interest net income of 70,875. 70,875. So the portion for the controlling interest, that's the requirement in number 45. So as stated, refer to number 44 for computation. In number 46, the income to the non-controlling interest. And in number 47, the income to the controlling interest. The income to the controlling interest. Now let's see what are the correct amounts for number 47. Actually, we are asked for the income to controlling interest. Our answer to number 47 is letter A. That's 615,375. That's the income to the non-controlling or to the controlling interest. So controlling interest in consolidated net income or profit attributable to equity holders of parent, we have 615,375. Now that is how letter A was computed. So we have now the controlling interest in consolidated net income of 686,000. Actually, we are dealing with different years. So consolidated net income for 20x5 is, but we are asked for the consolidated net income for 20x4. So the non-controlling interest as well could refer to 20x4 and 20x5, which some of this we will be confused because of the years involved. So in number 46, the question is, what will be the income to the non-controlling interest for 20x4, no? So we are given 20x4 and 20x4, the net income of the subsidiary is 240,000. Then we add the realized profit in beginning inventory and deduct the unrealized profit. So we have 236,250, and we multiply it by 30%. So we have now 70,875. 70,875. Remember that number 46 now involves 20x5. So the answer to number 46 is D as in dog. You already have it in the computations. That's for 20x5. What will be the income assigned to the controlling interest for 20x4? So 20x4, again, we are now dealing with number 44 for the answer to number 45, which is letter A. So we have now 448,375, the controlling interest in the consolidated net income for 20x4. So number 45 is letter A based on this computation. And number 46, the consolidated net income for 20x4 is 486,250. So now we have the answers to numbers 43 to 47, number 43A, number 44C, number 45A, 46 dog, and 47A. Next, we go to numbers 50 to 53. Next problem, 50 to 53. Anyway, I have to, okay, so 50 to 53, question 50. Is the sale referred to above was a downstream sale? By what amount must inventory be reduced to reflect the correct balance at the end of 20x4? Use the following information for questions 50 to 53. Eagle Company owns 80% of Flyway Incorporated's common stock that was purchased at its underlying book value. The two companies report the following information for 20x4 and x5. So we have now the parent is Eagle and the Flyway is the subsidiary. We have now the 20x4 selected data and that of 20x5, including sales revenue, cost of goods sold, other expenses, net income, and dividends paid. During 20x4, one company sold the inventory to the other company for 50,000, which cost the transferor 40,000. So the transfer price is 50,000 with the cost of 40,000. As of the end of 20x4, 30% of the inventory was unsold. In 20x5, the remaining inventory was resold to outside the consolidated entity. If the sale referred to above was downstream, so if it's downstream, it's Eagle selling to Flyway. Okay, so by what amount must the inventory be reduced? So in number 50, the selling price of 50,000 and the cost of 40,000. So we have the original unrealized profit of 10,000. Then the unsold percentage is 30%. That's the unsold percentage. Unsold in 20x5. So meaning we have 3,000 as the unrealized profit. In number 50, the answer is letter A. By what amount should the inventory be reduced? So 3,000, letter A. Then number 51, for 20x4, consolidated net income will be what amount if the intercompany sale was downstream. So meaning it's a sale from Eagle to Flyway. Now for number 51, we have the consolidated net income for 20x4, the amount of 180,000 for Eagle, 600 minus 320, it's 280 minus other expenses. So net income given is 180,000. Then we have to deduct the unrealized profit in ending inventory. That was in 20x4, meaning the profit is still unrealized.